So welcome to another JK Deal Reveal. It is now 7 and
Facebook?
we're not on Facebook yet, no. And so it's going to become that much more exciting in just a minute. I have my partner here today, so it's very exciting for all of us. So let us go live and fingers crossed. Last time it didn't work. So it's looking good so far. Drum roll, please. Thank you. Directing to Facebook. Looks like we're good. Looks like we're golden. So let us begin JK's Deal Reveal, where we're going to show you how to look at properties and in a very short amount of time get a good grasp on it to see, is it even worth the time to pick up the phone and put in an offer. So you should be able to see our screen at this point. Just raise your hand or make some noise, do something so we know that you just see the JK's Deal Reveal. The time is now. Let us know. Fantastic. Thank you, Jarrett. And I'd like to welcome everyone here, new and old. We've got a bunch of people on here on the Zoom and even more on Facebook right now. So nice to see you all here. Just from the top, I have Wendy, Shahan, Jared, Dom, Cecilia. Thank you, all of you, for being here, and for everyone else I won't have the time to mention as you trickle in. So, JK's Deal Reveal. Today, we're going to get excited. We're always getting excited. Janie, are you excited? Woo! Woo! Let's do this. All right. So, we are going to do our best to stay under 15 minutes and maybe even under 10 minutes today, because we want to show you how quickly we can take a look at a deal and quickly sift it through to see if it's good or bad and take the next steps if required. So we're getting excited. Why? We're analyzing deals quickly. We're in a market where we can potentially find a deal that is 4 times better than what you can find in your backyard in Canada, if you're listening from Canada. And we're investing where numbers make sense. That is first and foremost why we're doing this. Today, on our JK Deal Reveal, it's actually a submission. Someone sent us in their property, says, hey, what do you think about this one? And this is it, okay? This is the only slide that we're gonna have today. And I'm gonna start right from an address, okay? This is the address I'm gonna go in right now. Look at me, I'm going right into my presentation to copy and paste it, as if I just got this from my email. What would I do and how would I look at this? I have an address and I have a price. $78,000 is what they're asking for this property. So let's begin. Let's start the timer now and see what we do. So the first thing I'm going to do is I'm going to go to Trulia.com, okay? But actually I'm going to do a backdoor entry. I'm going to copy the address and I'm going to put Trulia right after. And that's going to most likely pop up the property I am looking for. And of course, it's not working on this particular case. So let me try again directly in Google. Unfortunately, no, fortunately, this happened last week too, didn't it? Darn. So I'm going to go directly to Trulia, but normally that works, I swear. So in Trulia, you can just copy the address that you have here. Okay. And there we have it. So I'm going to go quickly. Just a quick glance. Okay, it's not looking like it's the hood. That's all I'm looking at. Trulia says it's worth about 94. I don't really like the Trulia estimate of value all that much. But I see it's a 2-bedroom, 1-bath, 768 square foot. Make note of this, and we're going to come back to this in a bit. Crime, and this is the first time I'm looking at it, okay? Crime is the reason I'm going to Trulia, because I want to see what is the crime rate. Because if I'm in a war zone, it's not even worth my time. I don't even want to continue looking at it if I know that the numbers aren't phenomenal at the very least. So here, I'm in a very low crime. There's no crime happening here. It's in Old Brooklyn. Let's just zoom out a little bit. So we're in the southwest, more southwestern suburb of Cleveland. So in terms of crime, no problem here at all. So the crime check is done. Next, I'm going to go to a website called totalviewrealestate.com, and I already have the address in my clipboard. So I'm just going to Control V, and I'm going to paste it right in there. And while I'm waiting for the site to load, I'm going to talk. I'm going to go make myself some tea or coffee, and by the time I come back, boom, here it is. The reason I like Total View Real Estate so much is because it gives me an idea on how much this property is worth. How? It pulls from Zillow the Zestimate. So Zillow estimates this property's value to be $94,000 in a range between 82 and 108. That's an opinion, but I like opinions. I want to get a whole bunch of opinions, and then I'm going to form my own opinion out of that. Total View Real Estate, this website has its own opinion of this property's value. It says, well, I'm not so in agreement with Zillow's 94. I think it's more 92. And how is it determining that? Well, it's pulling these comps, and then it's doing a complicated algorithm to figure out what they think it's worth. So it's pulling a bunch of properties here that are sold nearby, sold not too long ago with a similar square footage. It's telling you the price per square foot, and then it's giving you the beds, baths, and year built. Okay, so its criteria on what a comp is won't be the same as ours. So we're going to probably want to just spend a minute looking through here and really find those that are more specifically comps. So this was a 2-1. Recall, it was a 2-bedroom, 1-bath property. And it's pulling a whole bunch of 3-1s, 3-2s. I don't consider those comps right out the gate. So I'm going to look at 2-1s. So here's one right here. So what is this property selling for? Okay, Hichita Avenue, 72,800. See, it's lower than 94,000, isn't it? And it even has more square footage, but it has the similar beds and baths. Okay, let's see if I have another one here. This one. On West 58th. This one sold for 45,000. Smaller, puny, small property, 700 square feet, 2-1. Okay, let's see another 2-1. Here it is. This one sold for 60,000. Okay. A similar square footage sold actually this year for 60,000. Now, I don't know the condition of these properties yet, but I'm starting to form this idea that they're asking 78. And actually, this actually comes from a wholesaler who says that this property is worth about 100,000, about 98,000. That was there because they pulled from Zillow, and they probably decided to pull this one as a comp instead to fluff the numbers a little bit. But we're smarter than that. We're just going to dig a little bit deeper. And obviously, I'm explaining through this. I would do a quick glance at these, hone into the 2-1s, see if the square footage is reasonable, the age of the property is reasonable, and then I'd go and check the condition. But, you know, I'm looking here. I'm seeing that this property isn't worth 78, okay? So here's another one. Let's take a look here. 61,500, 900 square feet, 2-1. Okay. We have another one. 120,000. Ooh, this one's interesting. All right, that one's going to pull our average up. It's a 2-1, very small square footage, but 120,000, that gives hope, okay? That's probably a very high-end flip that was done. A retail sale was done on that property. So I'm going to want to dig into that to see how close that property is to the one we're looking to buy, and what upgrades did they do, and are we going to do those same upgrades if we have any hope of reaching the 120,000 mark with that property. And those are the comps, okay? So from here, I'm looking at, well, most likely it's probably in the 70-ish range. So there's 78,000, I think, is a pretty reasonable market value for the property. And then there's this oddball at 120 that I'd like to see what it's all about. So for the sake of argument, let's go take a look. So I click on it. It's sold. Let's see if Zillow has any pictures of the inside. I don't think it does here. You see it here? No, huh? So one thing that you could do is you could go right into Google Maps, okay, and see how close that property is to the one you're considering. So in Google Maps, you can take your directions from that property to our subject property here. Let's take this again. See how close we are. Actually, not that bad. We're just over half a mile away. So it's not the perfect comp within a quarter mile, half mile, but not that bad. It's actually pretty close. So next, it's the condition. I'd like to see what they did there and what condition is the property in right now. So let's just say that one's giving us a little bit of hope, and we look into it, and yes, we're going to do a similar job. So let's say that this property might be worth about $90,000, okay? You're buying it for 78. Is that a good deal? Okay, is that enough equity at purchase to say that this is a good deal? What would you think, Janie?
Well, it's tight.
Why is it tight?
It's very tight. Well, okay, so most properties that we saw are around the 70 range. So already if they're selling for 78, they're already, like you say, at market value. Now the oddball, like you call it, it's not something to strive for necessarily. And I mean, we've done that mistake in the past where we were hoping to get a higher number, and it's best if you just stay within the average. Yeah, because people, when in the past we did that mistake. So we did list our property for higher, just to test the market. But then people start wondering, okay, this property is very nice. Why is it either too cheap, or in that neighborhood, why is it so expensive? And that's not what you want, because then your property stays on the market for a little too long. So even if it's a nice comparable, I'd be weary of it.
When you get started, stick with the cookie cutter. It's what trades the most. It's what people expect. It's what's easiest to find comps for. So it's just going to be smoother. Once you get really, really good and you master a specific zip code, a specific area, a specific type of property, then you can, do tests around that.
Talking about cookie cutter, this is a 2-1.
Yeah.
2-1, and it's under 900 square feet. So guys, if you're looking to flip, or even if you're doing, if you're keeping as a buy and hold, or you do the Burr model, most families prefer a 3-bed, 1.5, at least obviously 1 bathroom, but 2 bath is ideal, 1.5, but 3 bedrooms, 1.5 bath, and usually over 1,100 square foot or 1,200 square feet. That's the cookies cutter style, and that's what you want to stick to. Those are easier to rent, and they're also easier to flip.
Wonderful. So we've been all talking about the first rule of real estate, which is you want to buy at a discount, right? Right now, if we buy at 78,000 and it needs any work at all, we're buying retail.
That's right.
All right. So rule number 1, I'm not sure we're really buying that much equity. We're not buying that much at a discount, number 1. But let's take a look at the cash flow analysis, the second golden rule of real estate. If you were to buy this at 78,000, what would be the cash flow on it? Okay, so we need to know first, what would you get in rent for this property in this area? There's a website, rentalmeter.com, and you can put in what a 2-bedroom, 1 bath would rent for. And I use this a little too often, so give me a second while I do. Oh no, it did pull it. Good. Fantastic. So it would rent somewhere between $699 and $709. Let's say it's 700, right? So if this property is rented for $700 a month times 12 months, you're bringing in $8,400 a year in gross income. Now, because I'm already not too convinced on the buying at a discount, I don't want to spend too much time going through all of Summit right now. Remember Summit, the shit factor of about $50 a month, the utilities, who's paying utilities? Then we have maintenance, management. Is there a mortgage, insurance, and taxes? The Summit. I don't want to go through all that right now because it's not the time. We're analyzing them quickly. We want to see if the 2 golden rules of real estate are even likely to happen on this deal. So rule 1 is, let's see rule 2. There's a quick golden rule called the 50% rule, okay? So the 50% rule says that if you have a property that's generating $8,400 a year, you can multiply that by 50% and it would give you the net income. That's basically after Summit, except the mortgage.
Right.
After Summit, except the mortgage, you would be bringing in $4,200 a year off this property. Well, if you're buying this property for $78,000 and it's bringing in $4,200, that's a 5.4% return. That's a 5.4 cap. Okay, that's not very strong. Right? It might be strong in your market. You might be in a 3-4 cap market, and you're like, whoa, a 5 just with this closing your eyes and just this random property came out of the 5. Yeah, but in our market, a 5 is really not exciting. I would look at an 8 at a minimum if you're in a very high class neighborhood, like borderline A, B plus, A minus class, which you typically don't buy rentals in because they're too expensive. But otherwise, you should be looking at a 10 plus cap on these rental properties. So this is half of the type of rental income that I'd like, or the investment power for each one of my dollars. So a 5.4 cap is really not exciting. Already, we're not buying at a much of a discount at all. So this one this one's not making the cut right now. If I were to put in an offer, it would be significantly lower than 78,000. I would probably be somewhere in the range of, listen, I mean, I like the property. There's no crime. It's a nice area, but we are cash flow buyers. We are income buyers. We'd have to be somewhere in the 40s, cash, quick close. Is that something? I understand it's a huge gap, and maybe I wouldn't even say it that quickly. I would say, this seems ridiculously overpriced for an investor. What are your thoughts? I'd try to have them negotiate their own price down for quite some time, maybe a month, 2 months, 3 months before even bringing an offer. But between you and me, what we would probably buy this property for would be in the $40,000-$50,000 range, because otherwise we're not buying at a discount and we're not buying that cash flow. So that's it in a nutshell. That's the JK deal reveal on this property. Let's see if we have in the chat here. Yes, James, a 5 cap is no good. A 15 cap is much better. It's even better. So yeah, aim for those 15 caps. You'll have a lot more leeway and less room for error. So fantastic. So I hope you enjoyed this JK deal reveal. Did you time me?
Yeah, pretty much 10 minutes on the button.
Yeah, there was a.
So this one is a.
No, this is a no good.
Is a no good.
We would have to be very aggressive on the offer and very patient in our negotiations to make this happen. Maybe in 3 to 6 months and a year, when the seller realizes that 78 is way too expensive. So that's where this one. Not every deal is a deal, and we have to show you that as well. Even if you're in Cleveland, Ohio, not every deal is a deal. So we still have to make sure our fundamentals are in place. And I want to remember to tell you and remind you that the Now for Tomorrow Club is still available. The $1 trial has ended. It is no longer available. We said it was a temporary thing. It's no longer available. But what is the Now for Tomorrow Club? It's a whole e-course on what to do before you buy your first property. We have a resource center, your real estate toolbox with scripts, templates, and action plans. Every single JK Deal Reveal free training, every training that we've done and recorded is in there, so you can listen to in ×2 or ×3 if I'm talking too slowly for you. And in the Now for Tomorrow Club, you're actually part of a mastermind group. It's a mastermind group that we lead with a good friend of ours who's also on the call, James, the one who said, no, aim for the 15 caps. We lead that mastermind together in English every Friday morning. It's included for free in the Now for Tomorrow Club. And I want to remind you that on the next fourth Thursday of the month, we're going to be talking, there's a free training on small multifamily for big cash flow. So we're going to be talking about duplexes, triplexes, and quads, and how those small multifamilies could be your tickets to some pretty big cash flow. So mark your calendar. October 22nd, we'll be there. Hope you will be too. So if you're interested in the Now for Tomorrow Club, this is how you get to it. n4t.club/NFTC. Now for Tomorrow Club. And it just froze. Last slide for you here.
And the Now for Tomorrow Club is every Thursday after this call from 8 to 9. So join us if you're part of the club. We're very excited. You guys, you bring your questions. It's coaching, group coaching. It's amazing. People have great questions. We have awesome conversations. Make sure to join us if you're at all interested in learning more about U.S. real estate.
Absolutely. And if you'd like your deal to be showcased on the JK Deal Reveal, this is how you do it. Send us an email or go on our website, n4t.club, and in the contact us form, just put in the any information you want about the property, at least the address, please. And then as you can see, that's all we need to do a full breakdown of the deal that you're potentially looking at. So one little comment in the chat. That's right, Dino. We are doing Now for Tomorrow for the lifestyle we deserve, and hopefully you deserve shortly. So take care. See you in the Now for Tomorrow Club in a little over half an hour, and sending lots of love. Cheers, everyone.
Bye, guys. Take care.